Welcome back, everybody. Sive Morten is here with the Forex Peace Army.com. Let's take a look again what's going on the gold market. So gold market now is our primary celebrity. So with this recent collapse that we see, now we once again could take a look at least on the daily chart. So here's starting forming some interesting patterns that we intend to deal with. In general, guys, this collapse should not surprise you, because in the recent 2 weeks in the fundamental reports we talked about this and we raising these questions. So should we do something around our major 4120 target? Should we make some reaction on it? Or so when the market hits the really all-time XOP target, you should be prepared that this might happen. Besides, in the recent 2 weeks on the Forex market reports, we also talked about liquidity issues that stands in the United States and in general with the dollar liquidity in the world. And currently, guys, the falling of the gold, I see some real footprints of these liquidity issues, because if you take a look on the overall cross-market dynamic, you will see that what is falling, Bitcoin. This is a great indicator of the liquidity. So once liquidity is becoming tougher, Bitcoin always stands under pressure. On the Forex market, we see demand for the dollars and dollar index is rising. We see drop in the gold and we see decreasing of the United States yields. So bonds on the markets are rising. So currently you can't call it as a safe haven demand because gold has dropped. And when you see simultaneously that dollar is rising with the background of the dropping of the yields, they usually should move in the same direction. It means that it stands demand for United States dollar. So that might be, this is of course not the reason why gold is collapsed, but it might be just one of the factors that has pushed it stronger to the downside. Now you could see lots of speeches around that, well, gold largest collapse in the history, so this is just catastrophe or something like this. But in fact, you should discount these speeches on a degree of the overbought and how strong gold has deviated from any moving average that you could apply, even long-term moving average, even the 50 days minimum moving average or whatever. So from that point of view, this is not the collapse, guys. This is just starting point of the retracement. It's really a very small part of it. We already talked about this with the big targets, and if market even drop to the 3,000, if it will drop even lower, it will not be the breaking of the bullish trend. It will be normal reaction. Actually, it should happen significantly earlier. But due to this the destruction of the global financial system, dropping of the confidence in the United States dollar, in the central bank authority, so that has led just for this boosting of the gold. So just keep the common sense and treat it logically. Nothing actually, I don't see something extraordinary here in this overall performance. So okay, let's take a look right on the trading. What we could do, first of all, on the daily chart, you could see that we have the perfect setup for the bread and butter trade. We have great thrusting action here. You could even trade it based on most recent thrust, not necessary to wait to use this one, this big one. Market dropped to the support area, almost reached the confluence, and you can see that drop significantly below the oversold. So we have simultaneously bread and butter buy around it and bullish stretch pattern on the daily chart. So this is, both of them are directional patterns. Now if you take a look at the 4-time frame chart, you could see that market is also retesting, following the same tendency, retesting these previous stops. You can see, yes, this very short-term tendency somewhere in the middle of the September. But anyway, this is the support line here, accompanying with the big support on the daily chart, and also daily oversold, and its previous top. So this pattern is still mostly valid, despite that we see big deviation from the trend line here. So market returns right back down. Finally, what's more interesting to us is, of course, picture on the hourly chart. The double top pattern that we discussed yesterday has been completed perfectly. We said that if you'd like to, you could trade it, and you can see that, as we said, actually, it might be even work really perfectly, which we see. We just do not call you to trade it just because at the point when we talked about this, it was right here, the bullish context remains valid, and we're, as we already explained many times, that we're trying to be more conservative in our recommendations, just to not bring too much risk. Although we always mention the potential patterns if even they stand in opposite direction. Anyway, we've got from this double top what we would like to. Downside target has been done. And once again, precisely at the support area that we talked about. And take a look, right now market is forming some kind of the hand shoulders pattern. With this forming of the something like right arm, some preparing for some pullback. So if you would like to take the long position currently, theoretically you could try to do this. You could drop your time frame even more, for example, somewhere to the 5-minute chart. And if especially if stop placement based on this setup, so volatility very strong, so you will have to place your stop somewhere below these lows, which seems to be too far. That's why you could either drop your trading lot or trying to get another pattern at the bottom of the right arm that could give you confirmation that our projection is preparing. For example, you could watch for a 5-minute chart and trying to get maybe some patterns that might be formed around it. This is our hand shoulders pattern, right, that I'm talking about. Looks really nice. But also take a look, maybe here it will be another pattern to be formed that will let you to place stop tights, for example, somewhere below these lows. This is some really already some art of the trading, so if you would like to call it in this way, based on experience, you're all on feeling, a trading method, and so on. But we will give you the general situation. As a conclusion, we could say that this is definitely not the point for taking short position. If you'd like to go short in the gold, wait for a bounce. Target of this possible up prediction will be around 42.85, somewhere in this area. Minimum target, if of course market will not retest the previous top and return back down or back up. For position taking, you could use either this pattern, this larger pattern that I said, this big pattern. If you could let yourself this with the money management and so on, or maybe watching on this bottom, you could try to find other pattern that lets you to place tighter stop if you'd like to take part in this trade. As you can see, a lot of interesting stuff is happening, and it's becoming once again interesting to trade in the gold. So let's see what we will get.